Well, good afternoon, everyone, and welcome. Thank you for joining us for this webinar today. I know that the notice for this kind of came out just this morning, but we're glad that several of you could join us. A lot of things have been moving really quickly here in Washington, D.C. as it relates to the congressional responses to COVID. So we wanted to be able to bring as much information as we could to our Native nonprofit community as possible, as I know you all are on the front lines and dealing with so many different parts of this in our communities. So we hope that this information is useful and that we've got some tips here that will help you as you navigate whether you want to apply for some of these funding areas and how to best access it. My name is Eric Stegman. I'm the Executive Director of the Center for Native American Youth, and my family's from the Carry the Kettle Nakota First Nation. And I'm just really pleased to have our partners here today who were able to pull this together quickly with me. I'm going to go ahead and kick it over to start us off just to walk you through our format today. We're going to ask that you use the Q&A box or the chat box to start leaving your questions for us. We're not going to address the questions until the end, as we want to make sure we get through the information. So please do use that. And if you're on the phone, please just dial *9 to raise your hand, and we'll try to get to you as well at the end. But we'll have everyone else on mute until then. So to get us started, I'm going to go ahead and kick it over to our, today we've got Eric Stegman, me, Dante Desiderio from the Native American Finance Officers Association, and we also have Joel Smith, Senior Vice President and Chief Credit Officer at Native American Bank, to give you this information and answer questions. So I'm going to go ahead and kick it over to Dante Desiderio to get us started.
Well, good afternoon, everyone. Thanks for taking time to join us. We did turn this around pretty quickly, as Eric said, and I'm really glad we're doing this because there is an element of timeliness to all of this and trying to develop a strategy on trying to get a PPP loan. So we know right now that the Congress is now negotiating terms of the second round of the PPP loan fund. And some of those provisions are going to be really important to the Native American community because there is going to be set aside monies for minority institutions, including some of the CDFIs and Native American banks. So I thought what would be helpful today is to go through exactly what the PPP is and then talk a little bit about strategy and ask Joel from Native American Bank to come in and talk about his experiences and what he can be helpful in providing as far as the strategy as well. There are some limitations that seem to be popping up here around strategy and around addressing some of the Native American banks and some of the CDFIs. So we're hoping to go over that as well. So this information is really for the nonprofit community, but also for maybe some of your associates, sole proprietorships, and some other businesses. If you're a CDFI, you have a lot of your constituents that will need to take advantage of this. This is a change in the way that they're funding this, so it does give opportunities to small businesses and associations. So one of the things that we've been hearing is, of course, the widely publicized Shake Shack debacle that's happened. They had to give their $10 million back. They're a huge corporation, and they were using some of their branches to be able to take advantage of the loan fund, which is not really the purpose of the loan fund. So we're back to banks and Congress wanting to look at this and address some of the smaller institutions out there, small businesses, small associations. So that's what we're really going to be focused on today. So the first thing I wanted to go over in our Paycheck Protection Loan Fund is some general terms and definitions. So first, we want to consider the timeline that we're looking at for these funds. So it's going from February to June 30th of 2020. This is really money that's meant for the next 2.5 months of paying basic salaries and other expenses. And on the eligible activities, there's a lot more than what's listed here, but nonprofits are, according to the law, included in this where they're normally not included. So any 501c3, according to the IRS code of 1986, any exempt organization is eligible. And what they're talking about for eligibility of cost, or what they mean by payroll costs, are the sum of the payments from any compensation for employees, salaries, wages, commissions, and other compensation, any tips, any payments for vacation, parental leave, family leave, sick leave, and also for dismissal or for separation. So this is really important because there's a contingency on this money. The whole idea is for this to be used to keep your employees employed over the next several months. So if you are losing employees or employees quit, will that go against your loan? Will you have to pay it back in full? And there is an allowance for dismissal or for separation of service, voluntary. And the other thing that it does include is for any of the healthcare benefits, retirement, and all of those things. So it's really comprehensive in what it includes for the entirety of the benefits. So next slide. The qualifications are pretty simple. You have to have under 500 employees and or meet the size standards that's in the NIACS codes that SBA keeps. And it's also for any tribal business concern, although gaming monies or gaming organizations, if you have more than 50% of your revenue derived from gaming, you're ineligible. And also any of the short-term lending facilities are ineligible also. And that's likely from the draft that we've seen today going to carry over. And it's important to know also that sole proprietors, independent contractors, and self-employed individuals are eligible as well. And it's not just full-time people, but also part-time and any others that are covered. This is not for consultants, or it's not supposed to be for consultants, so that cost in your payroll is not allowable. Next slide. So the other thing that's really important to know is what's not included here. So on the compensation for employees or individuals, anyone that's making over 100,000 is not going to be covered. It's not designed for the highly compensated employees. So your taxes imposed. So if you are back on your taxes or paying taxes with this, that's not included. Any compensation whose principal residence is outside of the U.S. And this is an important provision here. There's another part of the CARES Act that addresses getting tax credits, employee retention tax credits, and others under the first couple of, not just the CARES Act, but the first couple of versions of the coronavirus response. So if you're taking those credits, you're not allowed to take, for example, you're allowed to include sick leave and family leave and things like that. They're considering that to be double dipping in this. So I believe if you're taking the PPP, you're not allowed to take the credits on the other side of that. So next slide. So on the loan terms itself, so when you're looking at the maximum loan term, it's $10 million. So anything up to $10 million. But you have to keep in mind what this loan is designed for. So it's 10 million is the maximum, or basically taking a look at what your payroll costs, and remember everything that's included in there. So it's healthcare benefits, retirement, all the taxes for state and local that are attributed to payroll. So you take all of that, and for example, if you have a $1 million payroll for the payroll costs for the entire year, you just take 2.5, you multiply that out, your payroll for the year, and it's only 2.5 months. So you would, in effect, be eligible for a loan for $250,000 if your payroll is $1 million. So that's the maximum. It's different for every organization, and up to $10 million. For the costs that are recovered, again, for the general loan terms, you can cover a little bit more beyond the payroll costs. So I'll get into the forgiveness in a second, but the payroll costs that you're allowed to take the whole loan for are going to be related to what we talked about before on the payroll costs, but it's also going to include any interest on your mortgage obligations, any kind of payment for rent, utilities, including lease agreements that you have, and any interest on any other debt obligations. So the part of this loan that's forgivable is around the payroll costs, but these others are included. So we'll get into, I think in the next slide, on why you still want to take a loan for these additional costs. So on the forgiveness side of this, the funds that are paid for those payroll costs and all of that are forgivable. And you have to have at least 75% of your loan amount used for payroll. This is likely a qualifier, and Joel can give me a little bit, elaborate a little bit more on this, but it's likely a qualifier because there's so much demand for this loan, and they want to keep to the intent of the purpose of the loan, which is really to keep people on the payroll. So you also have to, if you laid off people, you have to hire them back really quickly, or you can do your best to retain them. And it's also forgivable. It'll be reduced if your full-time headcount declines or salaries or wages decrease. So if you're, for example, if you do have people that you are laying off, and if things, if it progresses in that direction, your loan forgiveness will also be reduced for that amount. So the other parts of this that are really attractive is that there's a maturity of 2 years at a 1% interest rate. The loan payments are going to be deferred for 6 months. So if you remember why you want to take a larger loan to cover some of those additional costs, over that, you're not really going to be making any payments for the first 6 months of the loan. You have a really low interest rate. There's no collateral personal guarantees. And the small businesses don't get charged a fee. These are 7A loans, SBA 7A loans, and there's usually a fee to the borrower for this. The banks are being reimbursed for any fees, and so all these provisions make this loan really attractive. So you can understand why everybody has jumped on this and wants to be a part of this program. I think the Secretary of Treasury had stated that they've done 14 years of loans in 14 days. So it's an incredibly competitive process. And I think the new funding hasn't been approved yet, but there were a few days ago, at least 850,000 applications that were still pending. And I'm sure there's a lot of activity Joel can probably attest to this. There's probably a lot of people reaching out to the bank to see if they can still get in, or how do they get lined up for the next round. So just on another note here on the left-hand side, we have on the resources section, an interim final rule. So any of the other details that you want on this are in the final rule listed here, and the SBA put together FAQs. I believe those are linked and they'll be a good resource. So before I go on to the next slide, I just wanted Joel to jump in here and talk about how robust the activity has been around this for the Native American Bank, or what you're hearing from some other bankers on this. How have you been handling the influx of applications?
Sure thing. Across the banking sector, all the banks that chose to participate across the board are reportedly at capacity, and doing all they can to deal with the volume. And there's a number of banks that chose not to enter into the program. Maybe they were not already SBA lenders. A lot of banks chose to offer it only to existing customers because they could do that on a more expedited basis. So you really need to check banks in your area for will they accept new customers into the program. But the reports are from a lot of large lenders especially that they had so many requests that they could not get to them all. People that put in an application day one of the when applications were opened, and they never got to them. there's all sorts of accusations around preferential treatment for large organizations through these big banks. But the fact of the matter is, we know a lot of people that have reported to us that they put in on time, and the volume dictated they couldn't get an SBA allocation. At Native American banks specifically, we basically had a occasion to have everyone work a lot more hours than normal so that we could process all the applications that we had. So we pulled all-nighters to get in before the money ran out the first round, so that if we had a complete application, it was fulfilled. I think we're unique in that sense. And I will just say that if you're working with a lender, whether you already have an application from the first round, really try to get out of where you are in the queue. Like, can you get it through this time? What's their capacity? Or can you look out for other options? Because you could move an application to a different institution if you think you have a better shot at getting it through for the second round of funding.
Right. So let's go to the second round of funding. We have the next slide up here is going over some congressional action. So today, just an hour or two ago, we have heard on the draft that was released, and just keep in mind, this is a draft that's released. I think there's still posturing going on between both houses, and we might get a different outcome here. But just judging from this is a good development here for some of the Native-owned banks and other CDFIs. So there's an additional $310 billion being appropriated for the PPP program. And then $60 billion of that is being set aside for small community financial institutions that are serving the underbanked or minority businesses participating in the PPP. So the way that looks is there's going to be, they're defining the community financial institutes as minority depository institutions, certified development companies, microloan intermediaries, and state or federal credit unions. So 30 billion of that 60 billion is going into the banks, credit unions with assets between 10 billion and 30 billion. And then another 30 billion is going a level below that, up to 30 billion for up to $10 billion for CDFIs, small insured institutions, and credit unions. And in that sense, there is the idea that some of the CDFIs that felt that they were being left out, and some of the other communities that are being served by these facilities were not getting access. Like Joel said, there was the idea that a lot of larger banks were taking care of their larger customers, and the customers that had a lot of affiliations with the bank. And then we also had a lot of the smaller banks that were scrambling to try to get even into the process. There was a lot of glitches with technology and things like that that made it really difficult and put the other communities a little bit further behind. So now that at least $60 billion of that fund is being reserved for those passed over communities. And we also have another 10 billion into the emergency injury disaster loan program that I'll talk about just a little bit, and then we want to talk about a strategy here about what to do and how to get in here. So on the next two slides, just talking really quickly here, we have $90 billion that's being targeted just on the strategy here. I should have updated this side. We have 60 billion in this, not 90 billion. So it changed from this morning when I developed it. But we want to know who to go to. So there's a couple of important things here. We're hearing from some of the Native-owned banks have been reaching out today that they're going to probably tend to serve their existing customers. Some of them are also going to be, they're very limited on the amount of loans that they can give, the remaining loan pool that they have. So they're going to be also looking to serve their regions. For example, I talked to a bank in the Midwest, and they're going to be serving the Great Lakes region. So what we did here, and Eric, if you don't mind just clicking on that link of native-owned banks. and hopefully that will work. So this link will take you to the Center for Indian Country Development, the Minneapolis Federal Reserve Bank. And it has a list of all the Native-owned banks. It also has a list of all the CDFIs, and it does that in a way that everything is mapped out. So if you want to look for a CDFI in your area or a bank in your area, you can do that through their great map program. But on the CDFIs, it's interesting because you have to be a 7A loan participant organization. So the ones that we've reached out to the Native CDFI network, the ones that are participating that we know are the Alaska Growth Capital Fund, First Nations Community Financial, Native Community Capital, and Muskogee Loan Fund. The Muskogee Loan Fund, I think they just announced a partnership with the agricultural community. So if you do have people that are looking to get some agricultural loans, that may be the first place that you go. But on the Native banks or on the strategy for participating, you know, Joel is here, thankfully, to talk about their bank's lending and how they're going to be participating. And so I'll turn it over to you, Joel. We know that you're one of other minority banks that are scattered throughout the country. How are you approaching this, and what are you looking at for helping to serve Indian country and specifically associations in this time?
Sure. So given our background and mission at Native American Bank, I mean, we're here to serve Indian country. You know, we're tribally owned, and that's our specialty. So it's a little bit different than some of the other tribally owned banks that, you know, they serve their backyard, which is fine. And you know, our market is Indian country. So being nationally chartered, we are available, and we've been helping new borrowers from Alaska and the Dakotas and wherever. We're headquartered in Denver, but we're not limited geographically. We're taking on new customers as well, because there's a need that we want to fill. Now, some of the other banks, like I mentioned, that are limiting it to current customers or only in their immediate market, you know, it's because that's probably what their capacity to process looks like. And we don't want to get them into situations where they take on more than they can process and leave people hanging that we're expecting to get through. So, you know, there's a lot of other tribally owned banks out there. I haven't seen if anyone besides NAB is going beyond their immediate geographies, but there are several that are participating in the program. So as far as general strategy for payroll protection loans, to get into this, wanted to caution everybody to talk to your lenders as soon as possible. If you go back to last slide, actually, you know, and get from them whether they have the capacity. Don't make assumptions. Don't put it in last minute because you think they have capacity. Really see if you can get a hold of your lender or your banker if you don't have a loan at an institution where you have your deposits would be the first place to go, or one of these other Native banks on the list, or Native American Bank. Other quick tips, pay attention to the math. Putting in an application, we've found a lot of them have errors in the initial submission. There are particular ways in which you're supposed to calculate payroll. There's particular periods that you're supposed to calculate payroll. And if it gets flagged for having an error, then that could be the thing that gets in the way from it being processed before funds run out next time. You can talk to your lender. You can talk to us at Native American Bank about if you need help with those calculations. There's guidance on the Treasury's website in general for the nuance. You know, the presentation went through the high levels of what qualifies, but there's some common sense stuff that doesn't. Quick tips, for instance, are FICA withholdings are not, or FICA taxes that the employer pay are not eligible. Workman's comp is not eligible. to have in your calculations that you would think generally are. If you want to go to the next slide now, just a little bit about the experience we've had at Native American Bank. We had the advantage of being a SBA 7A certified lender already, so we were able to get this program rolled out pretty quickly. We worked with most of our loans to tribal enterprises and nonprofits. We look at servicing ones that are based on reservation or off, urban Indian centers, for instance, 501c3s that are eligible that we like to be able to help. And again, that's all across the U.S. as far as our experience. As I mentioned, we were able to accommodate all the borrowers that came to us for this first round. That totaled 63 customers, $16 million. And there you see the breakout of some of the highlights for the types of entities that we were able to serve in the first round. And I think with that, we wanted to leave time for questions. I think we'll have contact information up and available as well for myself and my teammates at Native American Bank if you have other questions or would like to put in for a PPP loan if in the upcoming round. I would go ahead and do it now, even if the new legislation is not out. Some banks might say, come back and talk to me later once it's out, but it does not hurt to get in the queue. They can look at your stuff and make sure it's all right so it's ready to go and you can be first in line. So we're accepting applications at this point with the qualifier that we can't technically put it through until the new round goes, but don't wait.
So before we jump into the questions, Eric, if you can go back, I think it's to slide 10. I just wanted to cover the other program that's out there already. The next slide down. So on the economic injury disaster loan, there's an additional funding for this. I think it's less than the 60 billion that's coming out here, but or proposed funding. This is another SBA program. It's not for public nonprofits, but private nonprofit organizations are eligible, independent contractors and other vets organizations, and then really any business that's under 500 employees. So this is a quick $10,000 loan. They're considered either direct loans or loans that are sort of turned into grants, if you will. So these advances don't have to be paid back. They're just for these really quick loans that are supposed to help. They're supposed to be turned around really quick. So I just wanted to bring that up in case anyone's looking for that type of loan, because that is going to receive another round of funding in this next piece of legislation that we're expecting out by the end of the week for sure. Just to bring that up. But going back, Joel, to ask you a question on this. We've heard that, I think what you're pointing out, when people are putting in applications, the application should be done right. You don't want to have anything done that's going to either kick your application out. Does it help to put in supplemental information? For example, I think we've had some tribal businesses put in an application that really explains why they're eligible and and how they meet all these different guidelines. Is that helpful, or is that more of a distraction?
Sure. Start with the checklist that your lender gives you. Each bank has their own. There's some general things that you're going to have to provide: payroll records from your accounting system, payroll tax quarterly reports, and then from there, each lender might have their own custom list. So that's where I'd start to make sure that that's fulfilled. If the lender knows what they're doing as far as tribal enterprises and nonprofits, it should be a pretty easy eligibility demonstration. If there's a wrinkle, like if you have a PEO or some entity that does all of your payroll on a consolidated basis as a service organization, that's where there's a wrinkle that you might want to be able to demonstrate that you're the common law employer, as it's called. These are your employees, even if it's someone else is filing under their payroll taxes. But if you have these individuals that you send W-2s, right, that are on your books, it should be easily demonstrable that that's eligible. 501c3s, if you check that box, you shouldn't be challenged on eligibility for that reason.
So we'll try to get to a couple of loans and a couple of questions, speaking in Joel terms. So we do have a question on the nonprofits that no longer get gaming money due to COVID. Are they still eligible? So I'm not sure if we can queue that person up to ask the question because it raises a lot more questions. So there's been a couple of things that we were trying to figure out here. And one is you have housing authorities, which are, some are placed in nonprofit, but they still have a government role. Will those still be eligible? And also nonprofits that receive gaming money, if it's more than 50%, does that trigger something else? So there's other considerations here that you probably need to work through and get some clarity on. For us, we haven't, it depends on what if the funds are distributed by the government to support a nonprofit and not the gaming activity itself, that may be a differentiator there as well. So those are all things to really consider. And if we can't answer your question, today on the phone, we'll try to get you an answer. But Joel, do you have any insight on that from the applications you've received?
Sure. Well, a company that directly gets more than a third of its revenue from gaming is ineligible. I don't believe that extends an extra step. So, if you have gaming revenue that is pooled at the tribe and then downstreamed into a nonprofit as its general funding source, sure, we know that it was ultimately derived from gaming, but it's really tribal discretionary funds. In that case, that I would say would not preclude you from this. The point is the work that you do. The nonprofit has employees to do mission-based work, and that's what they want to be able to subsidize to keep employees at that level. They just don't want to subsidize the blackjack dealer. So that should be fine.
Okay. And just as far as housing authorities that are, at times nonprofits, but they also serve a government function, how does that work?
So if you are a TDHE under NAHASDA, our view is you are considered under the umbrella of the tribe and not considered a business unit as defined under the CARES Act. So that's the key is, actually they call it tribal business concern, and they, it's a separate entity that is for profit functionally, and generally TDHEs are not that. Now, the other safe harbor is if you are a 501c3. So if you are a housing authority and that is the way that you are organized, I believe you will be eligible even if you do that type of activity. Housing related activity is not fundamentally prohibited. It's just you have to be a business concern or a 501c3 as your only two options, and there's an awkward middle ground that we think that traditional tribal housing authorities don't quite meet, and they might have to look to access the other funding streams available under the CARES Act and supplemental legislation that are designed for tribal support.
Okay.
We have another question that I think is kind of an important one too here from Bethany. If we are a not-for-profit with a fiscal sponsor, we're waiting on our official status right now, do we still qualify?
If you,
no, go ahead.
well, sure. If you have W-2 employees and if you have your own tax ID, you will qualify. If you share a tax ID with a fiscal sponsor and they're the parent organization, so to speak, and functionally the payroll is going through them and they're filing payroll taxes on your behalf, so to speak, then fundamentally they would be the ones expected to file for the loan to help those employees that they have in addition to who you have at your organization. So it depends on, you know, which entity's name is on that W-2 for those employees for eligibility.
And there is something in the law that does state the exact date that you have to be a business concern. It might be February or January, but it does have to be, it is a few months prior to the act. So you might want to check on that. I believe it's in the FAQ or in the interim rule that interim final rule that we linked to the one slide there, but you might want to double check that.
It's February 15th. The answer of the date that you must be organized or in business, formed and filed. If it's after that date, you are ineligible. The date, how new you are, could depend on what period that you need to use to calculate your payroll for the application. So wherein generally you're expected to use the entire year of 2019 to figure out what your average monthly payroll was for the application, you could also use a trailing 12 months. If you are new, like you were not around for all of 2019, you can use just January and February. And then there's a last one that covers if you're a seasonal employer, you can pick a period that was last spring fundamentally, to the extent that matters. But how long you've been in business will dictate your period that you're supposed to test your payroll against.
We had another question come in over email. I just wanted to read before this started. We have already submitted a PPP application under the previous bill with no response. Do we have to submit again under this new package?
Under the program requirements, there's nothing to say you have to submit again. Your initial application should be fine, and hopefully then it keeps its spot in the queue for that lender to be processed first. And hopefully they're spending this time in between rounds getting it all squared away. Check with your lender though. They could put on top of it that they put a withdrawal on all of them as soon as the funding ran out, and maybe that bank has some other rule that says you have to reapply. Under the program, you don't have to.
So Joel may not like this, but this is the time you have to bug your banker, know where you are and if you are in a queue. And just because you submitted it before doesn't mean it'll be picked up. You're dealing with an awful lot of people that are trying to access these loans. I think the earlier you get on this and start going through the checklist and the application, the better off you're going to be.
Another question, we are an all-volunteer nonprofit with a contracted bookkeeper, so very little would be available to us for the PPP. However, we have lost the opportunity for our primary fundraising event due to cancellation. Under the EIDL, can we apply for funds to offset those losses? And do we go through a bank to apply or directly to the SBA website?
Well, the rub here is that only private nonprofits. I was digging around this morning to see if there was other entities or eligible programs that a nonprofit could be a part of, and it looks like the PPP is it. For the emergency loan would have worked in that case, but it's for private nonprofits. So most of the nonprofits are 501c3, and the private nonprofits go under a different tax code reference.
And I'm not sure if either of you know, we had another question. Is this similar to the National Council of Urban Indian Health COVID funding grant? Assume that might be something specific to.
It's completely different. Those grants are out of either CDC or IHS for the urban Indian organizations. And I think there's re-lending or re-granting in that case to get those programs and services out. So this is a much different program going into the help that the associations need rather than the help for dispersing those funds or aiding the communities for healthcare needs.
And what all, I know you addressed this a bit, Joel, but what all can be included in utilities expenses? Would that include indirect costs? I know a lot of nonprofits are struggling with those costs beyond payroll.
Sure. The guidance is actually kind of light on it, but functionally it's understood to include energy costs, water costs, telephone, and internet. I haven't even seen trash specifically mentioned, so it doesn't amount to much, but I wouldn't include that. If it falls on your financials, that's one reason that we request, for instance, like an income statement or statement of change in position to show, last year I claimed $1,000 of utilities a month. Functionally, you can qualify for what goes under there. So whatever form that takes, that should be an eligible use. And just, a caution, any uses besides payroll is limited to 25% of the total loan amount that's eligible for forgiveness. If you exceed that, then any balance above that would not be eligible for forgiveness.
Great. So I think we've covered most of the questions. If anyone has any additional questions, please do. We did have one about small business owners. For small business owners that don't have payroll, but their income is based on a percentage of their revenue, what program would work best? Not sure if you're working with any of those.
So the PPP is available for partnerships and sole props, single member LLCs that might not take a salary. Those kind of entities can demonstrate their effective compensation via their Schedule Cs. There's new guidance around, I believe it's line 31 on your Schedule C. They expect you to have filed for 2019, or if you haven't filed, fill out the Schedule C in advance to show what would amount to your annual net income of that. If you're an independent contractor or a sole prop, and then go off of that. So it doesn't have to be W-2 wages in those specific instances. If you can show on average for a month last year what your compensation looked like reasonably, that should be okay.
Great. I'm going to amend another question here that we got in asking for how many months does the PPP cover the payroll and the other expenses? And I'm just going to add another one that I've been hearing from some other nonprofits, which is when does the sort of clock start on the 8 weeks of expenses that it covers? If you could help with that, especially maybe for those who put in an application already, or that I think any clarification around the timeline of covered expenses would be great.
It is very specific that it covers expenses that you incur and pay within the 8-week period starting the date the loan funds. And that might be different than the date you apply, and it might be different the date that the SBA granted an approval. Banks have 10 calendar days to close and fund these after the SBA approves. So funding is the date your 8 weeks starts. That is when, after that period, you give the receipts to the bank and say, here's how much I spent on payroll, on utilities, on my lease or mortgage interest. And sometimes borrowers find that if they put in for the maximum loan amount, that they actually just didn't have enough anticipated qualifying uses to fill out that entire loan. Functionally, if you don't have much in the way of rent, and you're covering, 2 months of payroll, but it was sized at 2.5 months of what, average payroll used to be, there should be a little bit of a balance. And if you can't use it, downsize your loan requests. There's nothing wrong with applying for less than the maximum. So just make sure that you go in with a plan, and your lender should work with you to say, if you're going to use a maximum loan and you only have payroll account for 75% of it or 85% of it, and you have a balance, what does your lease look like? Do you have things that you can point to that actually can reasonably and are anticipated to use those up?
Well, also that gets into the compliance aspect of this for the nonprofit. make sure that you are, when you do receive those funds, it may be a good idea. It's been suggested to keep that in a separate account and start setting up all of your expenses related to that. So, you know, I see there's a question on here on the amount of forgiveness on this. We're using 75% in this example. It's actually, it can be higher, but SBA is putting in this provision or putting in this safeguard that they may reduce it to those loans that include 75% of payroll of the total loan amount. So this is a facility that is backed by the Department of Treasury for these SBA loans. They are, you know, there was talk about them scaling back on some of this stuff, but I would use 75% as, you know, as your loan cost. And I think banks are calculating that since it's highly competitive, but also on your compliance end, this should be you should start keeping a whole separate accounting of this, or notifications of what could go towards these loan costs. Like Joel says, this isn't going to be free money. You're going to have to justify this in the end, and you don't want to get caught in that end of that two and a half month period and have to either pay that money back or have other sort of compliance issues that come up. So we want to make sure that you're doing the right thing on the association end and tracking this stuff.
We have another question. Most of the loan applications are online and you don't talk to a person, and there is no tweaking of the formula for calculating the loan. Can't you return any overage, or does it get treated as a loan and you pay it off at 1%? I know this is a big question for especially those who haven't been able to work with a banker as closely.
Sure. If you end up with a larger loan than you can fully utilize for eligible uses, you can pay back the difference. So for instance, hang on to that money if it's fully funded at the beginning, if you can't use it for something eligible, and pay it back at the end of the 8 weeks. You'll probably have to pay back also the related 1% interest at that time. But if you then downsize the loan by paying it down, you should be fine. Just don't use it for some other ineligible purpose. That's where you get into the legal trouble of misuse of funds. We try to counsel more hands-on to ask for what you need so you don't get into a bad situation up front. But a lot of banks that are just trying to put it all online and do it in rapid succession might not have that flexibility. There is that safe harbor to pay it back down. But you don't stretch it for the 24 months. If the remainder of the 24 months is built for, you used it for eligible purposes, but you had something decrease your forgiveness because you lost FTE, you reduced payroll, or there's some things that you can use the money for but are not forgivable, like interest on non-mortgage debt you can use the money for, but only mortgage interest is forgivable. So that's what sits around for the remainder of that 24 months, not the overage. You'd have to pay it off right away before the forgiveness was asked for.
I have another question, just, and if others have, we have a couple more minutes of questions, so please feel free to chime in online. I know several of the nonprofits out there were also wondering, is it okay to apply with a couple of banks? What would that mean? Since, you know, sometimes it's sort of a race to get the funding.
So there's nothing to stop you from applying with multiple banks. You know, as a banker, obviously we'd want to be cognizant, like if we were the second bank coming in, and we're fine with that because we know that there's been others that have been left out in the cold, and you know, we don't blame them for trying to go both routes. What ends up happening is we would try to submit it as a bank to the SBA, and if someone did it first, it would say you're limited to one loan, and then that's that. Basically, whoever gets there first to submit to the SBA is who you're going to be going with. So if you do two of them and one of them says we got you through, please contact the other to say, never mind, I got it. But you can go two routes to hedge your bets, as it were, technically.
All right. Any other questions out there? Anything else you two want to cover? This has been super helpful so far, I think.
There is one question that popped up on having a tribe set up their own nonprofit, and is that still eligible? So there's a couple of things to this. Apparently from the question, it's not a 501c3, which is the specific eligibility in the law. So if it's not a federally recognized nonprofit, it's going to be difficult to do that. But on the other side, if it does have a separate employee ID number, and depending on the purpose, it may qualify under that any tribal business section, depending on what the purpose is. So that's something you may want to work out, but I believe that's in the law itself, that it has to come under that Internal Revenue Code.
Great. All right. Well, I think that's all we've got as far as questions right now. I have also just advanced the slide for our contact information, but just a couple of other housekeeping notes. I know several of you had questions about whether we'll be sharing this. We're going to be posting this as soon as we can on our website and sending that info out to the listserv who registered for this. We're also going to be posting some of these additional resources like that list that Dante shared from the Fed Reserve in Minneapolis for a guide to the Native American banks. And we'll try to pull together as many of the answers as we can. But if there are other resources that might be helpful, please do let us know. Several of us also have COVID response websites to help you through. Native American Bank has a great page on this. From their perspective, NAFO has got several resources relating to the federal policy work, and we have one that breaks down resources according to response funds, nonprofits, funders, and others. Anything else you two would like to share before we hop off?
Just one other thing on our end, we will send out a broadcast on the results of the back and forth that's going on now. So we should have final word on what that legislation looks like. And if there's any changes in eligibility, we're going to point that out. So Eric will make sure and send that on to you so you can send it out to your communities to have them understand what to expect.
Great. Well, I want to thank both of you for taking time in this incredibly busy time for both of you. But I can tell by our attendance today that a lot of folks really needed this information out in tribal communities. So we just appreciate you taking time. And if there are any other kinds of resources that we can help develop during this tough time for tribal nonprofits out there, please do reach out and let us know what your ideas are. We're really trying to develop as many events and resources as possible to serve both funders and our tribal nonprofit communities. Thank you all for joining us, and keep an eye out for our email.
Thank you, Eric.
Oh.